You know what's crazy? The thing that finally turned me profitable wasn't finding a secret indicator or strategy. It was actually understanding to fall in love with losing. I know that sounds completely backwards. For the longest time, I believed to be a good trader, you have to avoid all losses. I moved my stop losses, averaged down on my losers, anything to just avoid the L. But after 11 years in the markets and generating well over $11 million in trading profits, I discovered something that changed everything. The best traders aren't the ones who hate losing. They're the ones who mastered losing well. This mindset shift is what allowed me to flip $30,000 to well over $800,000 in my latest account flip. Not because I suddenly became a psychic about the market direction, but because I fundamentally changed my relationship with losing trades. Today, I'm breaking down exactly how loving to lose solved trading for me and how I can do the same for you. Most traders approach the markets with the wrong impression. They go into it hating to lose, trying to avoid losses and being right all the time. And look, I was in the same boat. I came from a background that I love playing sports, and when you play sports, you hate losing. If you lose to a team that were talking crap to you, you get so angry. If you go to school and you fail a test, guess what? You get super upset. They teach you to not get answers wrong. But trading is understanding that losses are part of the game. Something that in every other aspect of life, we're not used to. So we need to make that mindset shift. And we have to understand this creates a psychological destruction. Because one loss leads to another. You start feeling FOMO. You start closing your stop losses and just letting your losers run. You start averaging down those losses, and you start making all the mistakes we know you should be avoiding. But the hate of losing is too strong for you to take control of your emotions. We have to understand that most successful traders have really bad win rates. If we go look at the top 25 traders at TopStep live funded accounts, most of them have an under 50% win rate. Which if I had asked you if 50% rate was good, you might say, no, you need an 80 to 90% win rate. But the truth is, the best traders and most have a 60 to 70% win rate. The turning point in my trading career is the way I approach losses. I understand it's cost of doing business. If you run a store, you're gonna need to spend money on merchandise. It's the way I think about losses. It's the way that it helps me find opportunities. Maybe I need to take one or two small losses, but eventually it will lead me to a third opportunity of the same setup that I usually take. They will make up for those losses and much, much more. Also, we have to know that there are valuable lessons from the market. Each loss is a lesson. It's a learning point of what you can do to get better. I started to view losses from a business owner perspective. I'm looking at ROIs. Yes, I might take a $300 loss today, but tomorrow if I make $600, I'm still overall in a net positive ROI. Your goal should be for your revenue to exceed your expenses over time. Not just one day, but overall, I like to look at a whole month. This shift can change the way that you look at losses altogether. Start looking at them as valuable data points to learn from them. Stop fearing losses. Stop taking them personally like the market is against you. And most importantly, stop letting them affect the next trade. I see too many traders make this mistake. They'll take a loss and then the next trade, they think about their old loss and they will not take profit at their right take profit levels because they need to make back the loss. No, a loss should not affect your next trade as it has no input, has no real value on why you're taking the next trade. So put a loss or the win for the last trade behind you and approach every trade fresh. We have to understand that trading is a probability game. Overall, we have to look at statistics. We can't just get attached to the P&L. Our edge over the markets shows after a large sample set. No trading strategy is 100% win rate, and even the best setups sometimes fail. Think of it as the casino. Imagine you're a casino. You know you'll have some players that win some hands, but maybe they'll even go on a nice hot streak. But you know, over the long period of time, you have the edge. So over a large sample size, the casino and the house always makes the money. But in this case, you're not the player going up against the casino, you are the casino itself, because you know your strategy has an edge over a large sample size. If your trading is the house edge, you can't let your emotions get in the way of your trading plan. Because slowly, if you fall trap for FOMO or your emotions not respecting your plan, the edge slips far away from you. When you start thinking like this, you start understanding that losses are part of doing business. You start budgeting for those losses. You don't trigger emotional negative response to losing, and you definitely don't steer away from your trading plan because of a loss. Now, don't get me wrong, loving to lose doesn't mean you go out and seek losses. It means using them to improve your system, using them to your advantage, and build a database based on those losses to make your edge even better. This is how actually you want to implement your mindset. I budget for losses before I start trading. I expect a certain percentage of my trades to lose, and I view each loss as purchasing valuable market information. When I take a loss, I ask myself these questions. Was it one, a valuable, profitable setup that I actually took? Or was it just some random trade that I took? Did I miss something in my analysis? Did I execute my analysis properly? And what can I learn from this loss? What are some blind spots in my trading plan that I should have analyzed for the next time I take a trade so I can avoid that loss? This will transform your losses from an emotional event that causes a negative reaction to a learning opportunity, something you can improve on. Proper risk management is what allows you to love losing. When you know your maximum downside, you can be okay with that loss. When your losses are small and manageable, they're not gonna hurt you. When no single loss can significantly damage your trading account, you'll start accepting them. My risk management framework is simple. I usually tend to risk between 1 to 2%. I use dynamic risk management, which means based on the quality of my setup, I might risk up or I might risk down as low as 0.5%. I only increase my risk after proving consistently profitable system, and I downsize my risk during periods of drawdown. This approach creates psychological freedom. It removes the fear when you enter trading, you're just so scared. If you already know the max loss you can take, it removes that freedom and you can trade just freely. You can wait for your take profits to get hit, and you don't have to be scared and just emotionally close your trade because of P&L. Understand the loss before it even happens. The paradox is that strict risk management results to the best gains over time. The best traders are not the ones who lose the least. The best traders are the ones who lose the best. They accept losses, they don't get emotional over them. They don't take them to heart. They extract the most information they can from each loss, and they manage them rightfully. They close their trades quickly if they goes against them, and they don't pray the trade just returns in their favor and remove their stop losses from their chart. This approach creates a competitive advantage over other traders. You're not losing and getting emotional over them. You're not over trading. You're not causing FOMO after a loss. You're definitely not taking them into your next trade and letting them affect your next trading plan to cause a dominant effect of losing more and more over time. You remain rational and system-based versus emotional based. To become a profitable trader, you need to learn how to maximize your wins and minimize your losses. Keep them manageable and keep them small, and use them as an advantage. Some practical steps you can take to become a loser: you can write down affirmations and repeat them to yourself every single day. They're not failures, they're just feedback. They're not personal, they're just probabilities. They're not the end, they're just part of the process. Now implement these practical techniques. Implement what is your maximum allowed loss based on your trading setups if it goes against you. And does that make sense for your risk management based strategy? And practice some loss meditation. After a loss, sit back, relax, and take 3 deep breaths. I promise you it will make you cool off for a second and not make you want to jump in a revenge trade. You always want to reset your mental state before your next trade so it doesn't affect the next trading plan that you're building. Track your loss quality over time. Did the current loss affect your next trade? How big was that loss? Did you follow your losing proper risk management plan when you took that loss? Were you able to maintain emotional equilibrium after taking that loss? Remember, the goal is not to eliminate losses completely. They're just part of the game. The goal is to build a healthy relationship with losing so it doesn't affect you, and it lets you trade your trading plan correctly no matter the outcome. If you're serious about trading and taking your trading to the next level, learn how to analyze your losses and learn how to manage them. This single shift in perspective could be the last missing piece between you and consistent profitability. For those who want to work with me directly and learn how to implement these systems in real time, consider checking out my mentorship in the link down below. Thanks for watching, and I'll see you guys in the next video.